Hello, this is the TradeSight Stocks and Futures Market Preview and U.S. Economic Data Roadmap for the week beginning Monday, September 16th, ending Friday, September 20th. We're having a good trading month. Charts, as usual, brought to you by eSignal 11. Here's a look at the S&P 500 daily chart. We have been watching this chart. You do this religiously if you're trying to make money in the markets. There are some interesting things going on here, so let's talk about them. First of all, recapping back from November, the long uptrend that we were watching, the false break and immediate recovery in April of that trend line, the multiple 13 sell signals that the market blasted right through in the strength, showing the strength that it did, and then finally cracking it in June, hugging it for a little bit, really crushing right here, coming back up exactly to the line in early July, hugging the underside of that line. Very strange, retesting the line, but rising well above the original break, which was at 1625 or so. You end up at 1700, still retesting the line. Tried to pull over a little bit, back up here again. What's interesting is in that motion, we've got a 9-bar setup, and then we started a new seeker count, 1 to 13. We were looking for the 13 sell signal up here. We only got to 11. We got a 12 here. Now remember, the seeker, unlike the Comer, we like the seeker more on the daily charts, but it does not need to make a new high over the rest of the count to get the next number. So the 12 was here because we closed on this 1 bar, closed above 2 bars back. It was the first time we'd had that happen in this range right here. So we're still looking for that 13. Now each of these asterisks is a bar that potentially could have been a 13. It meets the 2-bar look back criteria, but we have the qualifier turned on, which means we need to be above bar 8. Bar 8's right here. So we technically need to get back up to about 1700, and then we can get our 13 sell signal. What's interesting here is we're going to recycle. Okay, we're going to a new 9-bar setup here. Matter of fact, I'm sorry, let me take a look. It's probably, there's your new 9-bar setup completing here on Friday. So any other push up would have given us the 13 exhaustion. We've got a new 9-bar setup phase. It's going to be real interesting to see how this plays out. But we're definitely at a point of exhaustion. Whether we get another new count that starts over and have to wait through that, I don't know. Very interesting stuff. I'm still looking for a move down. I'm looking for that red static trend line as being the target if we do head down. We'll take a look at some of the other major daily charts. We'll look at the intra-week action, and then we'll go look at the data coming out this week ahead and talk about what to expect in the week ahead. So here's a look at the Nasdaq 100 daily chart, and you can see here we had a 13 sell signal on this one that killed us for a month in August. It was a flat month again. Not as flat if you look back. Remember January? It seems like a distant memory now. Remember how bad January was? So flat. Anyways, not as bad in August, but still not very exciting. Love that little floating island right there. So we've now breached that risk line, and again here as well. And there it is, a new 9-bar setup phase on the NDX. We'll look at the stocks. Okay, looks like it's staging a cup and handle for a breakout, but it also working on that 9-bar setup phase should be completed here on Friday, and the biotech index also. So all these on 9-bar setup phases. That makes it hard to think we're going higher from here, even if we didn't get the 13 sell signal on the S&P. Oil, here's a look at the oil index chart. You'll notice that the 13 sell signal there and the pink risk line are still in play because we have not gotten a close above that line and then take out the high of that bar. So the risk line is technically still containing oil. And finally, we'll take a look at gold on the daily chart, which has been declining. That one's 9 bars down, approaching the static trend line. Now let's flip. Take a look at the intra-week action, and this was interesting. Now keep in mind, this is the ES, this is the S&P E-mini futures contracts. This is the December contract. Friday, Thursday, Wednesday, Tuesday, and Monday. You'll notice a couple things. First of all, there's no volume at the beginning of the week. Why is that? Because from Thursday in particular, jumping into Friday, we rolled the quarterly contract. We took out the September contract, which expires this coming Friday, but all the big money shifts and starts trading the December contract. They do it in unison from Thursday to Friday. That often slows the market down because the technicals have to jump from one contract to another. It's not unusual to see the market be flat during that period. But what's amazing about this is if you just look at the action here, we got a gap up from Sunday into Monday and a gap and go day. So the strong day there. And then a gap up Tuesday, okay? And if you take basically, take out that first bar there on Tuesday, the entire rest of the week was in a 10-point range on the S&P or the ES. Typically we trade about 16 points per day on average. We had 10 points for 4 days on the ES, basically, maybe 11 or 12 if you count a couple of the real low here and the real high, but overall 10 points. That was a really poor trading session, especially coming off of last week, which was phenomenal from a trading perspective. We had a decent week again this week, nothing to complain about. But well, there is something to complain about. I would have liked to see more action here in the market. Not uncommon though to get these 2 days flat around the contract roll, which is only a quarterly event. Let's also look at the Nasdaq futures, and then we're going to glance at oil intra-week just to show you. So Nasdaq, this is interesting on the 10-minute bar. Monday's move, Tuesday's flat, Wednesday. Remember, that's Wednesday and Thursday is when the volume starts to come into this contract. Look at this. You get this gap up. And this move up, this 9-bar move, and you get a 13 sell signal right here, and that's the top, and then you can see the risk line containing it on the 10-minute frame. So again, the Comer signal gets it right for us in terms of capping the market. All right, let's take a quick look at oil intra-week. You can see that it was actually down Monday and then Tuesday, rallied back a bit Wednesday and Thursday, gap down Friday, closed up a little higher by the end of the day on Friday. Also, oil, which was on the move. Rich was all over this in the room. Big drop in oil. I'm sorry, big drop in gold. My apologies, gold this week, based on what's going on over in Syria. Everything retreating from that. All right, so let's take a look now at the economic data that's due this week. I just pulled up the wrong window. Here we go. There you go. Here it is. Starting Monday, Empire Manufacturing before the bell, industrial production capacity utilization 15 minutes before the market opens. On Tuesday, CPI, that's a big number for us. That could cause a gap in the market. Some housing index, no big deal. Wednesday, MBA mortgage index, housing starts and building permits, crude oil inventories. There's a Fed announcement. We've got a 2-day Fed meeting Tuesday going into Wednesday. So that's going to slow us down a bit in the middle of the week. Now remember, this is triple expiration, so we should have a couple things. We should have options unraveling. That would usually be Wednesday, sometimes Thursday. Since you've got the Fed meeting on Wednesday, it may be that options unraveling comes on Thursday, a little more likely this way, but we'll be watching both days carefully. One of those 2 days should be the better range trading day of the week. Then on Thursday, you've got initial claims, continuing claims, current account balance, existing home sales, Philly Fed, leading indicators, and natty gas. A lot of data Thursday. Even more reason why we might get the unraveling after the first hour is where that usually starts on Thursday. And then you have triple expiration, as I said, on Friday, usually just a completely dead day. There'll be a lot of volume, but no action. I rarely trade the second half of the day on triple expiration days. And the only reason to trade the mornings is if you get some kind of gap on news, which is going to be hard to get when we don't really have any news. So we'll see how Friday looks. But again, we're really pegging our hopes on Thursday in particular, maybe something Wednesday just because that's the traditional day for options unraveling. Maybe a little action early Tuesday because of the CPI, but you're going to lead into that Fed meeting. So got to lower your expectations for Tuesday. So that's what we're looking at for the coming week. We will be calling it in the lab and in our reports as usual. We hope to see you there. If you haven't taken a trial, you certainly can and come in and join us in the trading lab so we can help you out. Have a great week and weekend.